How are you utilizing your resources? Now, as an individual or business organizations, we are expected to put our resources into use. Now, when we put our resources into use, we derive gains or losses. Now, in putting the resources to use to derive gains or losses, we are expected to take what? Records. How do we use double entry to record our what? Incomes and expense. Now, when we put our resources to use, we derive gains or we derive additional wealth. Now, the earnings derived from the utilization of business resources for a particular period is what we refer to as what? Income. What am I trying to say? When we put resources into use to what? To derive additional wealth. Are you there? The earnings derived from putting these resources into use is what we call incomes. Incomes are also called revenues. Examples, we have sales made from what? From the goods that the business deal in. Commission received for what? For services rendered. Rental income received for letting out buildings or properties. Movie tickets, that is basically for those in the business of what? Of cinema. So they sell tickets for you to watch movies. So to them, that is what is an income. So we have various incomes depending on the type of what? Business. So long as we are trying to utilize resources to derive earnings, that earning derived from utilizing the resources is what we refer to as what? Income. When you utilize business resources, aside from deriving earnings, you are also likely to make some losses. Now, the part of the business resources lost for that particular period is referred to as what? As an expense. We can also define expense as the cost incurred in a particular year that expires within the same year. For instance, you paid for what? For office rent. Usually it is charged per annum. So what it means is that the cost of rentage will expire in that accounting year. So any cost incurred that expired in the accounting year or in the accounting period is referred to as an expense. For instance, cost incurred in purchasing goods for the business, cost incurred in transportation, cost incurred in paying for insurance, cost incurred in paying for salaries, cost incurred in paying for advertising, cost incurred in paying for what? Communication. Any expense that is incurred and expires within that year is referred to what? As an expense. Any cost that has also been seen as part of the what? Of the business resource utilized, and then also seen as what? As a loss. As a loss for an accounting year is referred to as what? As an expense. Now, we have been able to establish a definition for income as what? As the earnings derived from what? Utilization of business resources. Now, how do we apply double entry for incomes? Remember, incomes can either increase or what? Decrease. Here we have incomes. Examples: sales. I already told you what that means. Discount received. Rental income. I told you what that means. Movie tickets for those in the cinema business. Donations. Some business or some foundation, for instance, depend on donation from what? From individuals or from other organizations. Let's even take the COVID-19 saga as an example. A lot of individuals have contributed to the fund in form of what? Of donation. So to the federal government, that sort of donation is what? It's an income. So for any organization that depends on donation to what? To carry out the activities, donations are seen as what? As income. So we have subscription as well. These are for organizations that usually will charge members, certain amount as dues, maybe yearly or monthly. Even if you look at organizations that are into what? Satellite television, like DSTV, for instance, usually you also pay what? Subscription to them. So to them, that subscription paid is what? Is an income. So you have to understand what the industry or the business activity to establish if the item is an income or not. So we have allocations received. Usually the government will give maybe statutory allocations on monthly basis to what? To state government, and state government gives to what? Local government. So at the state government level, such allocations are seen as what? Income. So in the business or in the industry you are operating as the person reporting the activities of the business, you have to be able to tell if the item is an income or not. So having established if the item is an income, or having established that the item is an income, you have to now interpret to know if in the transaction the income is increasing in value or decreasing in value. Where it increases in value, you credit, and where it decreases in value, you debit. Now we also established a definition for what? Expenses as what? As a cost incurred in a particular year that expires within that year, or part of the business utilized that has been what? Lost. So when you lose part of what you have utilized from your resources, or when you lose part of the resources utilized, they are also referred to as what? Expenses. So I give examples. I say, okay, expenses, we have purchases. That's when you buy goods that you're dealing. Carriages, you can spend money to what? Bring the goods that you purchased into the business, or even spend money to send goods sold to what? To customers. So carriage inward or carriage outward are expenses. We have discounts allowed. We have advertising, warehousing, when you have the space where you put your products. Sometimes they call them goods banks, but generally it's called what? Warehouse. That's where goods are stored to be sold. So we have communication, and we have depreciation. Depreciation is what? The part of an asset that has been what? That has expired. For instance, you have a motor vehicle. The vehicle is an asset that you use over a long period of time. So if you're using it for 5 years, the first year there's a part that expires. That is what we call what? Depreciation. So the value of the motor vehicle drops. So the more the years of usage, the lesser the value of what? Of the motor vehicle. So that part that is going out of what? Of the cost of the vehicle is what we call what? Depreciation. That's what you're losing in utilizing the what? Vehicle. So it is what? An expense. We have insurance, we have rent, we have salaries. When you put people to work, you pay them salary. Is part of the explanation to establish what an expense means. Now, after I established that, I also said that your expense can either what increase in value or decrease in what value. Where your expense increase in value, you debit, and where it decreases in value, you what credit. Now, having established the pattern of what applying double entry on incomes and what expenses, let's try and identify income and expense item in some transactions. Remember, I said what your income can either increase or decrease. When your income increases, you credit. When it decreases, you debit. Your expense can either increase or decrease. Where your expense increases, you debit. When it decreases, you credit. So let's look at some transaction and try to identify expense or income item, and then see if it is increasing or what decreasing. With this understanding, our next class will be an illustration of all the what items, asset items, liability items, income items, and what expense items. For now, let's concentrate on what the income and an expense item. So the first one here says sales for cash. In this transaction, you can see two what items, sales and what cash. Why sales is an income, cash is an what asset. So here we're not dealing with asset items. You can go back to our previous class where we dealt with what assets and understand how to treat assets when they either increase or what decrease. So here we are concentrating on what income or expense item. So in this transaction, we have sales as the only income item here, and then we have to identify if the sales is increasing or what decreasing. Well, it's obvious that what it's going to increase in value, because if you have not sold and now you're selling, it means that what sales will increase or income will increase by the amount of sales that has been what made. So we have sales here as an income item what increasing. The next one say paid for transportation by check. We can identify two items here, transportation and check. I told you when you hear check, it means bank. Bank is an asset, so go back to the class and understand how to treat what asset items. The only expense item I can see here is transportation. Action is what increasing. You can see it under the what the column here, item increasing, expense item what increasing. The next one is purchases made in cash. I can identify purchases and cash. Cash is an asset. I'll go back to the asset class and understand how to treat. So we have purchases here. If you're purchasing, it's increasing in value. So we can see it here as an expense item here, increasing. The next one here for say paid for rent by check. I have rent and what check. Check is bank. Bank is an asset. I'll go back to the asset class to check how to treat what asset items. Here we are what concentrating on what on expense items. So rent here is increasing because you're paying rent. If you've not paid rent and now you're paying, so the expense is increasing by that value. So we have rent under expense item increasing here. Here we have subscription received in cash. I can see subscription and what cash. Cash is an asset. Subscription received is an income. So we have the income item here as subscription, and it's increasing here. So see it under the the income item increasing column. The next one say paid for carriage on purchases in cash. Carriage on purchases, it's also called carriage what inward. So it's an expense increasing. So we have it here, carriage inwards, expense item increasing. The next one says sold goods on credit to Kingsley. Remember, when you sell on credit to someone, that person is called what? A debtor. So debtors are assets. And then we have sales here and Kingsley. Kingsley is the debtor here. So debtor is an asset. You have to go back and understand what we said in the asset class. So here we have the income here as what? Sales. Sales is increasing here, as you can see. Then we have purchase on credit from Ben. Remember, when we buy on credit, the person that we bought on credit from, we are owing him. And when we owe, it's a liability. Remember the liability class? Go back to liability class and understand how to treat liability item. But here, we can also identify what purchases, which is an expense item. So purchases is increasing. You can see the increase here. The next one says Kingsley returned part of the goods sold to him. So we sold goods to Kingsley on credit, remember? Now he's returning part of it. So it means that what? The sales made will reduce. So what do we use to what represent reduction in sales? We use sales returns, or returns what? Inward. So I can see here, income what will reduce here. That's sales returns, or returns inward. The next one says return part of goods purchased from what? Ben. Remember, we purchased from Ben. Now we're returning part of it. So if we purchased goods worth 1 million and return 200,000 worth of, that means what we have purchased initially will reduce by what? 200,000. And what do we use to represent the reduction in purchases? We use returns what? Outward, or purchases what? Returns. You can see here expense decreasing. So purchases return, or returns what? Outward. Now we have been able to define income and expenses. We have also been able to explain the double entry application on incomes when they increase, and the application on incomes when they decrease. We have also been able to explain the application of double entry on expenses when they increase, and expenses when they what? Decrease. We also took what? An illustration to identify what? Income and expense items in transactions. You can as well pick up transactions and try to identify income and expense item, and then try to apply double entry to know if double entry for transaction identified or item identified when they increase, or when they what? Decrease. If you have questions, you can reach me on 08136506356. Or you send me an email, jeremiah.dosu@gmail.com. If you are watching on YouTube, you can send me a direct a message via inbox, or drop questions in the comment section. I'll be there to respond to you with answers. Thank you.